Share trading in embattled China Evergrande halted in Hong Kong. Trading in shares of heavily indebted China Evergrande was suspended on Monday, days after some bondholders said that the property developer at the center of jitters over China's financial system had missed a second key bond interest payment. Shares of its unit, Evergrande Property Services Group. Now, if you've watched previous videos, we talked about how they have multiple businesses. It's not just a properties group solely. Were also suspended. The Hong Kong Stock Exchange said the bourse didn't say why trading in the company's stock had been halted, and it was unclear who had initiated the suspension. Wow, that never bodes well. It's like, we did this thing, but we don't know who did it. We're not going to talk about it. Nothing to see here. Story over. Evergrande did not immediately respond to a request for comment. With liabilities stretching into the hundreds of billions of dollars, equal to 2% of China's gross domestic product, Evergrande has sparked concerns its woes could spread through the financial system and reverberate around the world. Initial worries have eased somewhat after China's central bank vowed to protect home buyers' interests. Well, that ding ding for that, and that kind of protection is the exact thing that we need to have so that things don't start to collapse based on the rumors of things falling apart, right? So we need some stability in what in the situation, and hopefully China Central Bank backs that up and doesn't just like, well, we said we were going to do it, things happen, bureaucracy set in, and bam, all of a sudden nobody's getting the protection that they need, and things are just free falling out of it. So it goes on to say Monday's share trading suspension sent a shiver through the broader financial markets, which remain nervous about contagion. Knocking the offshore yuan, is that how you say it? Yuan? A little lower, and weighing on the Hang Seng benchmark index. Evergrande, shares in Evergrande have plunged 80% so far this year, while its property services unit has dropped 43% as the group scrambles to raise funds to pay its many lenders and suppliers. Stock in its electric vehicle unit, China Evergrande New Energy Vehicle Group, fell as much as 8% earlier on Monday before pairing losses. The Cash Wrap Group said on September 30th that its wealth management unit had made a 10% repayment of wealth management products, which are largely owned by onshore retail investors. The two offshore payments, which bondholders said failed to arrive by their due date, come as the company, which has nearly $20 billion in offshore debt, faces deadlines on dollar bond coupon payments totaling $162 million next month. So what I wanted to bring up real quick is I got a lot of respect for Meet Kevin. I know he just did a video yesterday or day before talking about how he thinks that this is all kind of overblown, and when we think that there's going to be a crash, that it actually has the opposite effect. We don't end up having a crash because of it. Now, I think that if the home buyers are protected, I think that we will be able to see mostly smooth sailing coming out of it. But if something goes wrong, because I don't want to be like, hey, the sky's falling, ding ding ding, sky's falling, we gotta ring the alarm. I think that if they can protect the home buyers and they start to maybe restructure the company, and have people actively trying to fix the problem rather than, hey, everything's cool, everything's fine. Like we are way overextended, and we just cannot, with the current situation, we cannot provide the money for for our lenders and our suppliers. I mean, they have to be taken care of, because if they're not taken care of, the ripple effect of that alone could be catastrophic on so many levels, right? Because they have lenders and suppliers themselves that they got to get paid, and then the ripple starts to feel. And because of how big it is, I don't think it's, I mean, if I remember correctly, Kevin brought up like the fact that the hedge funds only had like 2% of, or less than, or 0.2%, or I don't know, some very small amount of money held up in like what I think we said it was junk bonds or something to that effect. And it's like, oh, okay, well, that's not the overall problem. The overall problem is that these people, these other companies that they're indebted to, need to get paid, or else they can't pay. And then that's where it starts to really unravel, when you talk about such a large scale problem. So that's why it needs to be, because you're going to start putting those companies under business, then those families can't, don't have work, and it could take an already, on the edge situation through the pandemic and like push it over the edge. And that's exactly what the world market does not need. So as much as I'm not a fan of, let's just bail everybody, bail the biggest people out, they get golden parachutes, and yeah, they were overextended and they didn't do anything to fix the problem, in the year and a half of knowing that there was actually 2 years of knowing that a problem, or close to 2 years of knowing a problem. And there's a middle ground, and I think that it needs to, somebody needs to step in there and figure out how this is not going to be a problem going forward. How are they going to resolve the problem today? Halting does not help the situation at all, and might cause more people to panic, which starts to pull people out. I know in the trucking industry, growing up in there, you don't want somebody to think that your trucking company is going out of business because of the fact that all of a sudden they think that their pallets of stuff are going to get stuck on a loading dock somewhere with chains put on the doors, and you can't get your stuff, and all of a sudden that creates a ripple effect. And I mean, fortunately, a smaller ripple effect than the ripple effect of billions and billions and billions of dollars connected through the whole world to a housing market. So yeah, I absolutely think this could become a problem. I'm not sounding the alarm yet, but it definitely is not. It's not a good thing, unless you're looking at it from a perspective of things were free falling and we halted it. And it looks like we don't quite have that. I don't quite have that information right here. So I want to, caution, but let's see how this plays out. And I'll be following this as we get closer and closer to hopefully a resolution.